You guys doing?
Good, thank you.
Good. Well, on this first slide, Mark, I'd just like you to tell a little bit about, Mark, just tell us a little bit about yourself and your background. And what you see here on the slide, not only do you have a background that wasn't in real estate as far as your careers, but you did have prior real estate experience that you jumped into. And the first thing I want to mention, though, is that you are members 1 year ago this past month that just actually the month that we just started. So this is perfect timing for you to do a case study for us. We really appreciate you being here. Tell us a little bit about yourselves.
Sure, happy to do it. And we're delighted to be Lifestyles Unlimited members. As Lori mentioned, we joined a year ago, and it was through one David Fisher class. As a matter of fact, halfway through his class, we were ready to join. Yeah. And we have been to a couple of the 2-day events, and those really illuminated some new opportunities for us that we didn't even know existed in real estate. But I am a business owner and have been running my own business for about 16 years. I co-founded a company. Julie and I both have finance and accounting background experience. Julie is an inactive CPA. So at this particular point, we do invest in both single family and multifamily passive. And those multifamily passives were not available to us before we joined Lifestyles Unlimited, and we're super excited, super grateful for the opportunities that we have with multifamily. But we do have some prior real estate investing experience, and I may be the poster child of how not to do it. Prior to joining Lifestyles Unlimited, I had a different approach, but had I gone with the approach that Lifestyles Unlimited teaches, I know we would have been further ahead in the game at this point. But that being said, we're extremely grateful that we began investing in real estate because it has really been a game changer for both of us. It's been a game changer for our family. And I think that it will continue to be a game changer for us going forward. We're so super excited about the opportunities that we've learned about just this year that before this year we didn't even know existed.
Yeah, it almost reminds me of the person that Dave was highlighting there that he had like 1.6 million, but he grew it into 11.5 within a very short time. So there again, like Dave said, you can start at any place. It doesn't matter the amount. It's the fact that you can grow it so quickly. And you obviously did have some prior real estate investing experience quite by chance, just doing it on your own. So you kind of got hooked on it. And yes. So what actually brought you here to Lifestyles Unlimited then?
Well, as you mentioned, we had some real estate experience, and the more we experienced with real estate, the more I started to like it, even though, again, all the opportunities that are in real estate were not illuminated to me. Listen to the Lifestyles Unlimited radio show, and Julie and I listened to it together a couple of times, and then the introductory workshop came along. We had the privilege of seeing Chuck Hartman speak at that, and he really brought it together in a very succinct way that just made a lot of logical sense. So we immediately became Lifestyles Unlimited members that evening, and then after that we went into the workshop and immediately joined as Preferred Investment Group members. But like I said, without the information that we have obtained and put into play this year, I wouldn't be quite as excited as I am about our future with real estate. It's still been a wonderful, wonderful ride. It's still been very, very good to us, which is probably a testament to how forgiving real estate is. In other words, if I can do it, anybody can do it. But if you do it the Lifestyles way, the opportunity for progress is so incredible. It's we're still a work in progress very much, but we're learning more as we go, and we're so just enormously grateful for these opportunities.
Well, good. Well, we've got, let's go ahead to the next slide. We've got two takeaways when you said that you learned something really that you didn't know before. When you came to Lifestyles, you learned two things, and I just started working with you probably November or so when you were going for your single family, because you've been working on multifamily since joining, right?
Right.
But you have these properties, and it's an impressive portfolio to have done on your own, and several things that we can take away from here. But one of the things that I thought of when I saw this portfolio that you already had is the fact that we say don't get rich or to get rich quick. And, you know, when you look at some of the timelines here, when you started with Buttercup, and I love that you name your properties, but
Yeah.
so we started with Buttercup in July of 2008, and we went all the way through to 2019. And I can see a progression here where 2008, then you save and save and save, and finally get that next one in 2014. Boy, that's a long time. And then one in 2015, then you get two in 2016. So you're starting to build momentum on that train. But boy, we can get you there a lot faster with leverage and a lot of things. So explain a little bit how you got some of these houses, just briefly, because this isn't our highlight. We want to see what you did with this and bought the Lifestyles way. But
Okay, sure. I'll tell you how I fumbled through it to begin with. Out of college, I obtained a position with a company called Lomas Mortgage, and my task with Lomas Mortgage was to redeem properties at a tax sale auction. And I learned what a tax sale auction was. So around 2008, I noticed that our bank account was producing a really, really miserable rate of return. And it made me mad. And we have watched the DIY and home garden shows and have been inspired by, some of the shows. So I thought, you know what, I'm going to go to a property tax sale auction. I'm going to buy me a property. We're going to fix it up. And we're going to turn it into some more money, and we'll see what happens. Well, we bought the property in 2008. And after we did, I discovered that the electrical wiring had been stripped out of it. I discovered that there was a bunch of numerous problems with this property that I wasn't aware of, because you cannot inspect a property when you buy it at a tax sale auction. Again, do not be like me.
Lifestyles would have told you not to do that, right?
If I can serve any purpose here, is how not to do it right. So we bought that property, and come 2009, it was ready to go. But guess what? 2009, nobody can get a loan. So I asked my real estate friend, what do I do now? He said, congratulations, you just became a landlord. I said, okay, cool. So we put a tenant in this property, and all of a sudden I started experiencing what you call mailbox money. Mailbox money is when you walk across the street in your shorts and your tank top and your flip-flop, and you pull out a check for a few $100s, and you start to like it. So we were building and saving with the mailbox money and with the business. I met the lady who was the landlord of the house next door to Buttercup, became friends with her, and later called her to ask her if that particular property was for sale. She said, no, it's not, but I have one down the street off of Wichita Street that I'll sell you. So that kind of began the string of purchases. I basically bought out her portfolio over a period of time. And again, did it all wrong, because a lot of these were cash purchases, and that tied up my cash when that tying up my cash was not necessary. That could have been avoided, and that cash could have been better spent on other investments.
But we didn't know.
We didn't know at the time. Unfortunately, we haven't heard of Lifestyles Unlimited until 2019. And it's going to be interesting to see how much progress we can make from this point forward. But we were diligent, and we worked hard at it. And I did believe in the model of Lifestyles Unlimited, best product, best price. So I worked very, very hard and hired some good people to do good things to these properties. And in spite of my ignorance, we still made wonderful rates of return. That could have been amplified significantly if we had gone through Lifestyles Unlimited methodology.
Right, and there could have been lots of mistakes too. So So,
Yep.
but because of the fact that you've got lots of equity in these, and you basically gave me the equity that you have, because of course you were keeping records a little bit differently than how we actually, come up with some of our costs. But you basically took, for giving me your portfolio summary, you gave me their estimated value in today's market, less what you purchased it for and what you put into it for repairing to get it up to that value, right? And since you've held these quite a few years, you've got a lot of equity and your money back to get back into it, right?
Yes, that's correct.
Okay. So which one did you, I know, but which, tell our audience which one you picked and why to start with?
Okay, so, well, as far as the property we just sold, is that what you mean? Okay,
Yep.
well, yes, it was 612 Wichita. I had had a couple bad experiences with tenants there because then again, remember, I'm doing everything wrong. And had a couple of bad experience with tenants, but it still was a good property, and we had purchased it for a low price and sold it for a whole lot higher. Now, I wouldn't have done this had I not been to Lifestyles and learned about what a 1031 exchange is. What the 1031 exchange allowed us to do is to realize all of the gains of this property and not pay taxes on it. I didn't even know that existed before this year.
That was a light bulb moment for us when we went to the 2-day last year. And when David was talking about this, I remember us looking at each other going, oh my goodness, that was the moment we go, we have to jump on to this.
Yeah, because you've got a lot of untapped equity.
And we knew that because we were running the numbers in our head and we're going, we don't know what to do with this. We're just going to keep it. And then when we heard that, we go, we can actually do something with this now. And that was revelatory for us.
It was. And as you can see, we still have a lot of work to do.
Yes.
Now, I in my last seminar with David, I dubbed him my real estate priest. And I have confessed to him my sins. And he and you, my mentor, are faithful in guiding me to the passage of the light. And I'm very excited that we are now on that path.
Yeah.
But we did do the 1031 exchange. And what was wonderful about the 1031 exchange in this particular case is that it afforded us enough money from that sale to leg into what's going to become 5 doors instead of 1. Okay, and that's
Mark. Can I say something real quick?
Yeah.
Okay, I know there's a bunch of new people, and he's saying a lot of lingo you don't understand, because most of you don't even know what a 1031 is.
Okay.
Let me explain it in layman's terms. It's something I'm going to teach you this weekend. Even come to my seminar, where you take all the profits from this one deal, you move it into new deals, and don't have to pay no taxes. Normally, you'd have to pay capital gains taxes. He's paying 0 because rich people don't pay taxes. Defer. And that's what I'm going to teach you this weekend. Okay, go back to being you.
Okay, thank you. So we're able to multiply our doors by 500% just by exercising this rather simple system of being able to do it that before Lifestyles we didn't even know existed.
Right. Okay, Dave, next slide then. So let's see what he actually did with Wichita in Everman. And it looks like you're the Everman Fort Worth moguls.
I guess you could say that.
So this is, you named this one Lindy because it's Linda's Creek.
Yeah.
Yeah.
And tell us a little bit about that one, how you got it. I see Scott there.
Yeah, well, this was an opportunity that came through Lifestyles. And when I first noticed it, it really caught my eye because it looked like it was a wonderful cash flow producer. And in fact, it's going to be. So when I saw this, I immediately reached out and spoke with Scott about it. We talked about the property some, and I verified some of the numbers. And when I did, I saw the real potential that was there for this property. And of course, with 1031 exchange money, we can get into this thing without coming out of our pocket of any of our personal savings or anything, which is a wonderful, amazing thing. Even now, I'm flabbergasted I can do this. But this was the other thing about this property is it didn't need anything. It came with a ready-made revenue stream that it was already firing on all 4 cylinders. And, I had an inspection done, of course, and went through all of that. But when it was all said and done, bottom line is all we did was inherit more money by making this purchase.
And the thing is, how old was that Wichita house? That house on Wichita, it was back in the 50s or something, wasn't it?
Yeah, it was an older property, and that's the other thing that if you want to go down the road of my the problems that I've had with real estate in the past that now will be amended, then I certainly hung on to that property too long, and that was one of the problems.
And you got a 2008 fourplex.
Correct. So now we've traded up 4 doors instead of 1, just on one deal with more cash flow and a step up in basis to where our depreciation will knock out our profits. So basically, this is going to be a tax-free revenue stream for us.
Good. So your numbers here, should I explain a little bit about that? Your purchase price, and you kind of negotiated some down so that you could cover those closing costs as well. So you weren't going for equity, so to speak.
No.
You were going for, which most people do with a duplex, triplex, fourplex. That's more of a cash cow for us and cash flow. So
that is correct. That what this ends up being is a wonderful revenue stream for us on a monthly basis. It's not a what you would call a deep value play. It's really not a value play at all. It's really a yield play, and you learn all about that in the Lifestyles Unlimited 2-day, which was another 2 key phrases that have really helped me shape our methodology going forward. So we saw this as an opportunity to capture monthly cash flow, and sure enough, you can see the cash on cash return at 14%. And the cash amount is going to exceed what we were getting from our other property. And once we close on the other property, it's going to exceed the cash flow that much more. So by doing all of this, because we now know what we do know now, we're able to do these things, and I can't believe we can do it, but we can do it without money coming out of our pocket by just simply making a good decision on something that was already ours.
Can I just want to add something for the new people that they don't quite understand what you're saying mathematically. So I'm going to explain it in simpler terms so they can understand. Think of it if you bought a stock that was making you $5,000 a year, and you could trade it for 3 more stocks, and this one's making 17 grand, and this one's making 10 grand. Instead of making 5 grand a year, making like 20 grand a year off the same amount of money. That's what they were able to do with this 1031 exchange in a simpler term, so you understand it. That's why he's so excited. And there's a technical term for that. Do you know what it is?
Peeing your pants excited.
There you go. It's peeing your pants excited because, I mean, think how powerful it is to like triple the amount of money you're making off the same amount of money. And that's where the light bulbs go off for me. You know, it's huge. It's going from the greenhouse to the red hotel in Monopoly. That's what you're doing.
You mean the apartments, not the hotel.
I know. I just want to make sure you correct me because I absolved you for all your past transgressions and sins in the past of holding properties too long and all that, but you learned all that. So that's good.
Absolutely true. So I have a lot of work to do. I have a lot of work to do on portfolio optimization. I have a lot of work to do on portfolio expansion. And we're focused a whole lot on multifamily right now. And I think we're going to cover that. We're also involved with passive deals.
now, before we go up to the slide, off of this slide though, I'd like to just say another thing that could be very intimidating to people is they say, well, you know what, you started investing haphazardly back in 2008. And that's great for you that you were able to cash out that property and have lots of equity, get your money back, and then reinvest it into this fourplex for $125,000. That seems a lot to a lot of people. So we're not just talking millionaires and people that have hundreds of thousands of dollars that they're able to use. When Dave teaches, you know, in the DFW, North Texas area, it's about between $30,000 and $40,000 a door cash out of pocket. You can see here that this actually works quite in line with that. You got 4 doors for the $125,000.
Right.
So it's about the same. You just did it all at once with that economies of scale for a fourplex.
Right, and the other thing is that money came from came from a real estate investment that was years ago. So
Mhm.
it's not like that money came from anywhere else. And as I've already mentioned, that money could have been a whole lot more than that had we used the lifestyles methodology. But it still just came from one single property purchase many years ago.
Yeah, and that's to the point, get in the game, get your first one. I tell people that all the time when I sit down with them for their first initial meeting. I said, you know what, you've got to get in the game and let the investment work for you. And pretty soon, just like a train leaving the station, it's going to go slow if you don't have a lot of resources to just throw at it all at once. But it's one after the next, and then boom, it just starts going like gangbusters, like you're
And
doing
Lori,
right now. So
yeah, and Lori, I think with what you're saying, we're the perfect example of that. I
Mhm.
love what you said at the beginning. We started in 2008. It took us several years to get there, but we got there. And then it is amazing what two can lead to four, can lead to onto that. That's how it works. And I'm kind of a skeptical individual, to be honest, when you go into this, but this is real.
Yeah.
There's one
It's
more thing.
real.
There's a more powerful thing that you guys did with this deal that you probably don't even realize. Before, when you had your property, you had all that equity,
Yeah.
okay, and you had a very low loan on it, you were paying taxes on that income
Right.
because your
Yeah.
depreciation
Yeah.
amount wasn't. So by doing this, not only that, this money all becomes tax-free income again.
Yeah.
It's a deeper
Precisely.
level of thinking you don't see on the surface, but once you come to my seminar, I'll explain more in detail of why it's now tax-free again, where it could have been taxable before.
Yeah.
Yes. Yes, indeed. It's
Well,
a
I know your
wonderful,
bank
beautiful
accounts.
thing.
And I can tell your accounts because you have your debit and credit tattoos.
Yeah. Okay. So yeah, it's really worth going and learning these things because there's such epiphanies for how you can advance quickly in real estate.
Yeah.
Well, yeah, we're all about that too. Learn from other people's success instead of other people's mistakes. It's not about, oh, Mark, what did you do wrong by going to auction or this and that? It was like you said, it was very forgiving, and you were getting more than you were. You
Yes.
tried to do the F word tried to fix it up and sell it, but you wound up being an accidental landlord, and that's where it comes in. You're obviously on that continuum. You're a business owner. You're working really hard and everything. I think you just love doing it, obviously, but you're
Yeah.
making sure with this portfolio that you're not stuck in it ever. That
Yes.
when you want to walk away, you can.
Right. And since we joined Lifestyles, that really marks the turning point for us. We were fortunate to be able to do what we've done, but now we're going to be able to make more returns based like on steroids instead of waiting and waiting and waiting.
Yeah, that's what Lori always says about our members. She says it's like putting your membership on steroids. And I love that
Yeah.
she's that team leader that brings people that action. So I love that she guides you through that.
Yeah. Oh, it's awesome. It's so nice having a mentor. It's so nice having somebody you can talk to that has been down this path before. It's just nice on a personal level and a professional level.
Yeah. Well, that's what this business is all about. And that's what's fun about the family and the community of Lifestyles is meeting people like you guys. We could become, once we actually get to see each other in person, we might actually, become better friends.
I think so.
But,
Yeah.
it's all about teamwork. And so
Yes.
that's what you've got here on this screen. You've got your mentors. Now, you didn't use too many Lifestyles vendors because I've got to say, you bought a property that was already fixed up, ready to go, tenants in place, everything. So,
In this
Scott
case,
bought
right.
the property and you had but tell us a little bit about over here when you went on vacation, because you were trying to time the sale of Wichita. We're dealing with COVID. Tell us a little bit about how the time frame kept getting pushed back. Finally, you just said, I'm going on vacation. And I talked you
Well,
off the ledge a time or two, didn't I?
you
Yes.
did. Thank you. The short version of this is that we wanted to sell one before we bought the other. And for the 1031 exchange, that's something you have to do. And David will tell you a whole lot more about that in the 2-day. But another thing that we learned this year is we don't have to be at home to close on the sale of a house.
Yes.
We ran up to Wisconsin just to watch the leaves turn. We've never been there before in our lives. We contacted the realtor. The realtor says, "Hey, no problem. We're going to send a notary up there with a bunch of paperwork." They literally walked upstairs, put it on our coffee table. The remnants of our bacon and French toast were still smelling in the air, and we just signed all these documents. It was over in 20 minutes, and then we could go hit the road, go enjoy the day, and just tear up the peninsula between Green Bay and Lake Michigan. And it's extraordinary you can do that. And the other thing I'll mention is earlier last year when we were walking across the Brooklyn Bridge in New York, we receive our rents via Cash App. I think Julie received like $4,600 just walking across the Brooklyn Bridge from.
It's so true. Yeah.
From rental income.
Go, isn't it?
What's that?
It's like passing go.
Yes.
It's so freaking cool. It's so freaking cool when you're walking across the Brooklyn
And
Bridge.
I'm showing my phone. Got to rent.
Yes, we got to rent. We're doing happy dance walking across the Brooklyn Bridge in
Yeah.
Manhattan.
Yeah.
So, what this, I guess if you want to wrap it up, the opportunities for quality of life, and they always say it's not about the money, it is about the lifestyle. We think that's absolutely true, because I'm very addicted to production, but I'm also addicted to contribution, and this is an incredible vehicle to be able to apply both production and contribution. And the people at Lifestyles, the members, everybody that we've met with have just been a delight to connect with. But yes, you can see on this slide some of my outdoor activities. You can see our family on vacation. You can see us yucking up in front of the White House. Where was this one down here?
Those in Laguna Beach.
Laguna Beach, yeah, just taking a ferry ride somewhere. I'm a dirt bike rider. I'm a fisherman. So now I have the opportunity to go and do these things, make money while we're doing it, and quickly and easily do business while we're doing it. So it's just a fantastic opportunity, and my gratitude is just tremendous to be able to do this.
Well, you're a very humble couple. You certainly are. And yeah, I can tell that you've got a lot of gratitude, and we're all, this is not about getting filthy rich or greedy. This is about creating the lifestyle that you want. And, sky's the limit. So if you take it up to that amount, there's no problem there, but it's all about enjoying it now rather than later and waiting for that. So what's next in your pipeline here?
Well, we've got some more portfolio optimization to do.
Yeah.
We could be doing some more. Yes,
Yeah.
you know that. We could be either doing more 1031 exchanges, more cash out refinancing. The former house that we lived in, there's another tax code that allows us, if we've been in it 2 of the last 5 years, that we can sell it, take that money, and that's tax free. So I think our plan there is to move more into multifamily with that money. I still want to continue to invest and expand, particularly in multifamily. But as you can see, I've got some work to do on the single family side. So I'm not sure exactly where we're going to end up next year, but I wasn't really sure where we're going to end up this year. But I can tell you what, it's better than it was last year.
Yeah, that's the goal.
So there's just so many different ideas we can pursue. In so many different ways we can do not only portfolio optimization, but portfolio expansion. And I'm really looking forward to learning more about multifamily too.
Yeah, well, you said there longer term, you might be an IRO or a lead. So that's definitely something to learn.
Well, and the other thing I'll mention is this other gentleman that's fixing to come on the screen. He's a friend of ours, and we're a part of his program and what he's going to present tonight. So I couldn't have imagined a better people to be able to talk tonight. And, having you here, having David here, and having Beni, who's coming up, this is the perfect night for us to be able to yak at you. And we're so grateful for the opportunity.
That was all by coincidence too, wasn't it? You started with Chuck and then David and me and Beni.
Yeah.
Right. Right. And yeah, and even Chuck at the beginning, I was able to talk with him. So I feel like I've come full circle. Y'all like my board of directors. And like I said, it's just nothing but thankfulness, and we want to help and give back as well, and participate in those kind of activities too.
Well, this is one of the ways to do it. So we really appreciate you taking your time, because people out there, it is a scary endeavor. And so it's real people getting real results, sharing their stories, being very transparent about things. This is not a big, cheerleading fest or rally for lifestyles. This is just real stuff. And it's very important for changing your life. Definitely.
Yeah.
It
So
certainly is.
We open up this section for questions, and I'm not sure if our member services people, they're normally the ones that will come on and let us know if we've got any. Hi, Amber.
Hey, we do. We actually have a few questions for you guys.
Okay.
So the first one is kind of a dual question about management. Doug was asking if you're self-managing or using a management company. And then he was also asking the mentors, is outside management by the door or by the building?
Okay. Well, in our case, we are self-managing, and we have been doing that from the beginning, probably more out of habit than anything else. This may be another habit. This may be another habit I need to break. However, up until this point, we've been able to self-manage, and it's worked out pretty good.
Cool.
Yeah, and there, Mark, and Julie, with the self-managing, as long as it's not preventing you from working on your business, on growing your business,
Right.
and you know what, I found it pretty easy, and it doesn't take up a lot of time. Now, if you were doing your own rehab and taking a 2-week or 3-week rehab and making it into 2 or 3 months, then time is money. But something like this, no, we say do whatever your comfort level is. And when it comes to property management, the management company, it goes by the number of rent checks that are collected, basically, is the percentage that they're going to take. So it's per door, per tenant.
Okay, perfect. And Pauline was asking also, she was asking about the 1031 exchange. If you do that, do you need to hire a specialist to do that, or would just any realtor be able to help with that?
There is a Lifestyles Unlimited vendor that we use for the 1031 exchange, and of course, we all love Luann. I probably should have mentioned that earlier.
I was just thinking she should have been on your slide.
Yeah.
People know you have to use a third-party intermediary, they're called. He used 1031 ERG Group, which is Luann Blau. There's my 2 cents.
Right. Luann is awesome. Luann is awesome, and the fact that that was provided for us, that contact was provided for us, meant everything in the world.
It did.
Yeah, the whole point is that money can't touch your hands. It's kind of like when you roll over an IRA or a 401k into an IRA, you can't touch it. It can't come to your bank account, nothing like that. So you need a qualified intermediary.
Right.
Okay, perfect. That's good information to have, and we do have her on the vendor list, so awesome. Thank you, guys.
Yes. Okay.
One other 1031 question that came through, Eric was asking if a 1031 needs to be one building into one building, or could you have purchased like 1031 out of your prior into 2 new single family or duplex purchases?
Well, as a matter of fact, that's what we're doing. We 1031 a chunk of our proceeds into the fourplex. There's another chunk of the 1031 that will exhaust the 1031 funds, which is exactly what I had in mind, to put it into another property. I think you can list as many as 3 properties during the listing period, if I remember correctly. And there's a variety of different options.
3 is what people say, but it's actually more than that. There's something called a 200%. I will teach you guys that stuff later, but I basically turned 3 1031 exchanges at the same time into like 15 buildings. So you can do it. There's ways of doing it. We actually have classes on that, just so you know. If you want more information about that, if you come to my seminar, you'll learn about it. And then we actually send you a video on 1031 exchanges, goes more into deep in that, just so you guys know.
There you go.
Okay, perfect. And David, you are teaching this weekend, yes? Just want to confirm.
Yes.
Okay, perfect. Thank you very much. All right, cool. Let's see. So going back from the 1031 exchange, you exchanged it out of a prior property, which I believe was your Wichita property.
Correct.
Okay, so I have a couple questions about that. Doug was asking, what was the cash flow on the Wichita property?
Well, cash flow on the Wichita, well, the time we sold it was zero.
Okay.
That's because the tenant that was in there got out, and I went and again did it wrong, but got involved myself in trying to take it to the next level to make it sellable. So at the time that it was sold, it was zero. It had been producing as much as $1,350 a month.
Okay. Oh, that's fantastic. Cool.
But please bear in mind, that's because he had all his cash in it for, and
Right.
he didn't have any of the deductible expenses. So there
Right.
again, you know, a lot of people, they feel comfortable getting that paid off and paid in full because their cash flow is greater, but the return is less because you've got more money dumped into it. And Dave's going to explain that too. And that was that aha
And
moment.
remember, he was paying
for Mark and
taxes
Julie.
on that. We don't want
What's
to pay
that?
taxes. So, and that's something I will teach you this weekend about debt equity and return on investment, because the deeper level of thinking, you can't solve the problem the same way of thinking of the problem. They're thinking I'm making all this money, but they're really not. They're not really
Right.
looking at return on equity, which I'll teach you all those formulas this weekend. I don't want to bore you right now.
Right. Well,
That
it's
was a
the
good
bottom.
question.
It's a great question, and the bottom line is it's not what you make, it's what you keep. And what David is going to teach you is how to keep more.
Right. Okay, perfect. And then Darla was asking, when you transitioned from your Wichita property to this one and you did the 1031 exchange, I think you said the cash out of pocket on this one for the 4 doors was $125K, but you had a lot of equity in the Wichita property. Was that 67, or did I miss that on the slide? And was that why you were able to get this for?
Okay, well, technically, since again I did it wrong and bought the property with cash, I had about $162,000 proceeds that went into the 1031 exchange.
Okay.
And of that, the 125 went into the fourplex, and the balance is going into another single family home.
Okay, that makes sense. So it made it basically a zero out of pocket because you were able to
Correct.
cash out the equity. So
Correct.
awesome.
1 door into 5 doors. That's the simple way of saying it. 1
There
to
you
5.
go.
That's fantastic.
That's better.
There you go. And
Nice.
it's a whole lot better now because we're going to keep more of our money than we were keeping before.
Yeah, 1, 2, 3,
Perfect.
4, 5.
Right.
I told Mark and Julie when I approached them for this case study, because their story was so great. I told them, as we were putting the slides together, they said, oh, well, we're under contract. And we kind of talked about this other house that they were considering. And they certainly went under contract as we were making up this, going through case study. And I just told them that I'm just going to make a franchise out of them. We'll do a sequel. We'll have a sequel number 2.
See, I think that's a great idea, because remember, I'm the poster child of how not to do it. So what you're going to see is the progression of starting way at the bottom and then being more like David. So
There you go.
that's everybody's objective. That's everybody's objective, is to apply what David teaches and exponentially increase your rate of returns.
Yes.
I
In that
absolutely
regard, you want to be like David.
You know, the
Not
fifth
in all regards.
lead the fifth.
All right.
Right.
All right. So Lilia was asking if there's a limit to the number of single family properties you can own. And we had another question asking how many single and multifamily doors you've purchased since joining Lifestyles.
That's a good question. Is there a limited? No, this is Lifestyles Unlimited, but you can get as many as you want. What we will have after closing on the most recent one that we're under contract now is 14 doors of single family. We are into 5 passive investment deals, total of 707 doors.
That's
Wow,
an apartment.
that's fantastic.
That's what a
That's
passive
the
is.
apartments. Yeah.
Yeah.
That's fantastic.
Yeah.
And just to follow up on that, when you heard Chuck in the beginning, he said Dell had over 100 single family houses. So that's not what we teach here. We don't want you having 100 single family. That becomes a job. The goal is to get to apartments as quick as you can. Mark is now transitioning, but he has all these deals, so it's gonna take him a year to move that around. He's growing as a person. He's doing the right thing. He understands that.
Yeah.
Perfect. All right, and then when you're looking for single family properties, and you're looking for the properties that are going to be good investments, Morgan was asking, how long is it too long for a property to be on the market that would indicate maybe a red flag?
I don't know. I'll need help on that one. The properties that we bought weren't on the market terribly long. And in this market, it's so incredibly hot that I don't have a good answer to that particular question.
And Lori may have some
Well,
feedback on that.
It depends on your market, obviously, but if it's a good deal, it's going to go fast. So the only time that something lingers on the market is when it doesn't make sense at that price point. And so you might be able to go in, eventually that seller is going to have to take a lower offer. And maybe they're passing on lower offers and it's sitting on the market. One day they're going to wake up and say, it's not moving, I have to take a lower offer. So sometimes we'll go in with a property that's been on the market for a long time and offer a reasonable amount that would make the deal work.
And that is something
It's a really good deal and it's priced right, it's going to go fast.
Yeah, I'll come back to seminar how to offer on properties and when to do that. And you got to realize, folks, people watch from all across America. Your market might not be the same as this market, the same as that market. Dallas is a very hot market right now. It is a great market. So
yeah, depends on your market.
Right.
Cool. So Jason was asking if you're still adding to your single family portfolio in parallel with your multifamily passive, and if yes.
Well, I guess the answer has been yes up to this point, but I think we're going to be doing much more focus on multifamily from this point going forward.
Okay.
Just so you guys understand, it's called the economies of scale. You can only scale single family so far, and they're at that point. They need to transition to multifamily. They have the money to do it. The goal is not to run all these houses. The goal is to sit on their yacht. Well, I'm just saying, in proverbial yacht, and enjoy the money, enjoy the cash flow, so they can help and serve other people, whatever the way they deserve it. It's buying back your time. And single family is great to replace your job income. But what's a legacy for the next generation? That's where they're at now.
Right.
Perfect. So do you guys enjoy single family more or multifamily more then, and feel the better returns?
I mean, it's just kind of a different bear, each of them. I mean, it's wonderful to just have your apartments and then down the road you're going to have your returns from that. I think that's wonderful. Single family has been very good to us, though. I mean, so I think they kind of serve a different purpose, maybe.
Well, and the other thing I'll mention overall is when you say the word enjoy, that is a key word here, because it is literally funner to invest in these properties for me than it is to spend money. I have so much more fun investing than I do just spending money. Seeing something grow, getting things on a progressive footing and watching things happen the way they can happen if you use the lifestyles model is so much fun. It's addicting. It truly is. I've drank the Kool-Aid too. So that's all I can tell you is
Everybody sees Jones references. That's not a good thing.
No, that's not a good thing.
Well, I think something else you can consider too. I know on the single family side, Mark, and he used to love going into a house, seeing a vision for it, going in, fixing it up, and providing a wonderful home, good quality home for somebody to live in it. There's something to be said for that also. So there's a tremendous amount of joy that's associated with that as well. So I think they both kind of serve a different purpose. So you have to decide what gives you your juice. I know, David, I'm using the juice thing again, but it
guys, it was not Kool-Aid, just so you know.
Okay.
What brand was it?
Right, but it's really fun.
This is very important. It was Flavor Aid.
Oh,
you guys
okay.
got the history.
Okay, there you go.
Go ahead, Mark, I'm sorry.
No, but the process itself is so wonderful, and the discovery is so amazing, and we're still in the process of discovery. I don't put us. I would say that at best I'm a novice at this, but I'm learning, and I think it's certainly going to get better going forward.
Well, I will say you certainly have a fantastic mentor. So
I
that
know.
is always incredibly helpful.
Superstar, absolutely. Yep.
Yeah, she's a rock star. I'd highly recommend her. And yes, when we get to meet, and if it's legal, I'm going to give her a big hug.
Can you guys both, from your perspective, you've been to my seminar, you know, you've met with Lori and all this. Think back, your first time coming to my seminar. I know your wife was skeptical, for example, before coming in, which is, you know, what advice would you give somebody new listening for the first time tonight?
Well, I would say, I'm sorry?
I want you each to give an answer because you might have different perspectives.
Okay. I would say number one, be open-minded, and number two, approach it logically and reasonably. Focus on logic and reason, and that really helped me through this particular process.
And I actually just going to reiterate what Mark said. I think being open, so many times, at least in my estimate, what I've done in the past is I go in and I already have my mind made up. You really do have to sit back and listen and look at the numbers, and you can research this. This isn't something where somebody's going, oh, we can do this and it's high in the sky. When David's going to sit down and talk with you, he's going to give you numbers. He's going to give you where you can do the research. He's going to give you solid information for you to go back and analyze it. So I think that's really important to do that. This isn't fluffy.
Right.
I know there's some raw we're going, you can do it, but the thing is there is so much information and data to support this.
Right.
You can go onto the IRS site. You can, I mean, there's all these different things that you can do. This is valid. And that was what was really important to me when I went in and David was saying these things. I could look at it, I go, okay, that makes sense. Those numbers make sense. Oh, this is a totally different way. But because I suspended what my judgment would have been, I was able to take it in and go, okay, this is something worth taking a chance on. And it's not really even taking a chance. It's just stepping into the reality of what the tax laws and what the real estate world is.
Right.
So I think that's really important to do that. And I also will say there is fear. Lori, you mentioned that there's fear, but sometimes you have to step through the fear. And this is an investment where you will get money back on it. This isn't like you're throwing it into a, and I, David, you talk about this. This isn't like you're throwing it into a stock or something where that can totally go away. You have a hard asset here. People have to remember that you have a hard asset. Values may go down, but you still have a hard asset. And that changes the dynamics of this as well. So I just wanted to throw that out for people to think about as well.
Yeah.
I just like the word you use, fluffy. I'm fluffy.
I just want to add one thing to what you said, because you were both on the same page on that. We have been taught one way when you said you're going into it with a certain understanding and frame of mind, and then you've got to have an open mind when you come in, and we've got to think you're undoing decades of what we've been taught is the right way to live our lives and to become financially independent. We're undoing decades, and David only has a weekend to do that in. So it's got to be compelling if he can change people's lives in a weekend, and Dell's been doing it for 30 plus years. So absolutely.
Yeah, it is harder to unlearn bad habits than it is to learn good habits.
But just be open, and you're talking to finance accounting people here. So, I mean, it was extremely drilled into us. But y'all, the information's out there to support what David's going to say.
Right.
Research
it. He's really good at finance because he lost his hair. You know, we use our hair, but
obviously it worked for me.
But do the research, but it's there.
Yeah, I appreciate so much you guys sharing your story and giving back, and we hope to have you back again. Lori can get you again, and we'll revisit this and see how you guys are doing.
I would love that. We would like that a lot. We're so grateful. Thank you very much.
Yes, thank you.
Thank you, guys.
Okay.